What's happening, everyone? What's happening? What's happening? What's happening? So it is a new week. It is Thursday. It is February the 27th, and in this live video on YouTube, and supposedly on Facebook, not sure if we're there or not, but if not, I will absolutely post this onto Facebook for all of our followers there. I want to talk about a new thing. Not really a new thing. I want to talk about advertising that's hitting the internet and hitting the market right now in North Dallas, Texas. So here is what you're seeing is you're seeing signs and advertising that says interest rates 1.99%. And they're all over town right now. So what does that mean to a buyer, and what does it entail to actually get an interest rate of 1.99%? It sounds great, right? And I've had people reach out to me and they've said, Troy, what does this mean, 1.99% interest rates, when rates are hovering in the mid to low sixes? And, how can I get an interest rate at roughly 2%? So there's a few things that you have to keep in mind. The advertising that you're seeing is simply that. It's advertising. It is builders and it's some lenders, but mainly builders are advertising, buy this home at 1.99% interest rate. And that is what I like to call a teaser rate, meaning that your interest rate may be 1.99%. But most of the time, if not all the time, I don't want to say absolutely all the time, but 99% of the time, it is a buy down type program, and it's either for 1 year, 2 years, 3 years, and sometimes even 4 years. So if you've watched my other videos on YouTube, I discussed the 2-1 buy down program. And what that means in a nutshell is that you have to qualify at today's rate, whatever the rate is when you apply for the loan or when you lock in the loan. So let's say it's 5.99%, right? Let's just say 6%. If it's at 6% on a 2-1 buy down, your first year, you're going to drop 2%. So it's going to be 3.99%. The second year, it's going to increase to 4.99. And the third year, and throughout the rest of the loan, it's going to be at 5.99%. So it's a great program for people to get into a property. Remember, you have to qualify at the higher interest rate, and the loan will not go above that interest rate, which is different than what happened back in the early and mid 2000s when they had pay option arms and different types of creative financing. So what the builders are advertising right now are these massively discounted rates. And the reality is it's temporary. That's my first point that I want to make. This is temporary. So if you're thinking about buying a home, whether it's new construction and even resale, the sellers are participating in a buy down type program. Remember that this is not the rate for the life of the loan. It is going to be temporary. So when I'm working with buyers and we sit down and we run the numbers with their lender and we discuss different things, one of the strategies that buyers have used is they qualify, let's say at 6%, and they're only paying 4% the first year and 5% the second year. Some of the buyers that I'm working with are actually paying the normal interest rate. So they're paying a larger payment for a lot of reasons. One is that they're getting used to that payment in the event that rates don't come down, so they can refinance, or two, they're doing it to actually pay off their mortgage earlier. So let me dive into this buy down program just a little bit, and I'm going to talk about some different strategies. So first off, the buy down program, as I said, is you have to qualify at today's interest rate, at the interest rate that you're actually in right now. So if it's 6%, let's just say, you have to qualify with your debt to income, your credit score, and all the other factors to get your loan in place at 6%. So what happens then is the seller, whether it's a builder or resale, the seller actually pays a percentage of your loan amount. So let's say that you're borrowing $300,000. They're going to, on average, pay roughly 2% of your loan amount. So the builder or the seller is going to contribute $6,000 to buy down the rate for you. That's not out of the buyer's pocket. That's asking the seller to actually pay this 2%. So now we've got $6,000. And the way that the program works specifically is every month that you make your mortgage payment, that out of that $6,000, it's put into a separate account that nobody can touch, and money is allocated every month towards your mortgage payment to make up the difference. So let's just say your mortgage payment is normally $3,000 a month, and you did the 2-1 buy down program. And there is $400 in the first month, and then there are $400 in the first year. Every single month, $400 is going to be allocated towards your mortgage payment. So if you're following the numbers here, and I don't have a lot of graphics today, but if you're following the numbers here, you can use that money. If you're paying the full payment, that extra $400 that you're paying out of your pocket on top of the $400 that is being contributed for you will help pay down your mortgage sooner. So simply put, if you have a $3,000 a month mortgage payment, and that's not necessarily a payment on a $300,000 note, but I'm going to keep the numbers simple. If you have a $3,000 a month payment and $400 a month is being allocated to drop your interest rate for the first year, you can pay the $2,600. That's the freedom of being able to leverage your money a little bit. But if you've already budgeted for the full amount and you pay the full amount, $400 a month extra comes off your mortgage payment, which isn't a ton of money, but it will reduce the actual principal that you owe at the end of the year. So some of my clients are doing that. I bought a house last year and I used a 2-1 buy down program, and that's what I am doing every single month. I'm paying the normal rate, so the $400 in that separate account is going towards my principal every single month. Now, here's another thing about the buy down programs is that if you get the buy down program, at any point in time, the interest rates come down. So what you need to do is you need to look at today's rate. So let's say it's 6%. And let's say in the first year to 2 years, because you have 2 years on this example, the rates come down to say 5% or 5.5%. or 4.5%, they come down at any point in time, you can refinance your property at that current rate. So the reason they've done this program is to help people get into a home and give them the opportunity that if feds lower the rates and then the banks follow with the mortgage rates, you can refinance and lock in at a lower rate. So it is a major advantage to use a program like this. Builders are offering it and resale sellers are offering it as long as the nets work. So let's discuss this 1.99% advertising. There's a couple other points that you're going to want to keep an eye on because it's not always necessarily 1.99%. So number one, builders are going to offer this. And then what I want you to do is I want you to look at the price of new construction and your taxes on new construction. And if there's an HOA on new construction, I want you to compare it to resale properties. You may be able to find a home that's only a couple years old and actually save yourself money in the long run when you start comparing the taxes, the HOA in Texas, if there's a mud tax or a PID tax. So you have to ask all these questions when you go into new construction to make sure, though the interest rate sounds great, 1.99%, but you could technically be paying more for that house when you could easily purchase another property that might be right across the street that's not new construction at even a 4.5%, 5.5%, or even 6% interest rate because of all the taxes and all the extra fees that are added on to that brand new construction home. Another thing I want you to look at when looking at a new construction and these advertised fees is what are they actually charging you for the home? Buyers are comparing new construction price to resale property price. So you might get a new construction home now, this is where the market has changed, for say $450,000 with all these incentives. And it may be possible to go across the street and look at a home that's only a year or two old, maybe even 4 years old, which isn't old for a home, and get it for 10% less. So look at things like that when you're looking at homes and when you're considering these, what I call teaser rates of 1.99%. Now stay with me through this live video because I'm going to hit on a couple of things here that are going to hit home when I talk about the actual percentage rate, or the APR. And that's something that a lot of buyers maybe aren't aware of, or they get excited about the 1.9% and they don't look at the APR, the actual percentage rate that they're going to be paying. So stay with me on that. So let's go back to the looking at new construction. There are a couple other things on side notes I want to talk about on new construction. I have had buyers go in and buy new construction homes without an agent, and they don't realize that the salesperson that's working for the builder is working for the builder. So, clients have said, hey, I don't need you, Troy. I'm going to go in this new construction home. And then once they do that and they sign in without an agent, without me or whoever, if you're working with another agent, they sign in. And once they do that, if they go back to an agent, there's nothing the agent can do to help them, because you've already signed a contract with the builder. Think of the builder as a for sale by owner, with the builder, and your agent or an agent is no longer a party, is no longer a person at the party per se, is no longer privy to the contract. So the agent won't be able to help you make sure you're getting all the incentives that have been promised, make sure that you understand the contract. Because remember, the salesperson, and I love the salespeople, they do a great job. I'm friends with a bunch of different new construction salespeople, and they do a wonderful job. Just remember that as a buyer, if you go in without an agent, you are not represented or have any other eyes on the contract to help you go through it. So an advantage of working with an agent is to have a set of eyes on the contract to make sure that you are being read the contract from a buyer standpoint. So I'm not saying that the new construction salespeople are bad, and I'm not saying that the new construction people are trying to put one past anyone, because they are not that I've seen. But it's always good to have a separate set of eyes on the contract for you, especially a professional that does this all the time and reads contracts like this all the time. Now, on another note, in regards to working with an agent, purchasing new construction, I would say the same thing I say in buying a resale home. Work with an agent that understands the process. Understand also that the agent is being paid by the builder. So all commissions are being paid by the builder 99.9% of the time. I know the NAR lawsuit and everything that's happened, buyers are skittish about working with agents and they don't know if they have to pay commission or not. But I can tell you, in resale and in new construction, it's very rare that a buyer has to come out of pocket for any type of commission. So, if you're a buyer and you're looking at new construction or resale, interview your agent. Make sure the agent is working on your behalf, and understand that most of the time, you as a buyer are not going to have to pay the commission. I mean, though you're going to be told what their commission is and what they're going to ask the seller to pay. Most of the time, you're not paying that commission anyways. I think that was I can do a whole nother live broadcast on that at another point in time. But realistically, I just think it was a lot of smoking mirrors. So if you've watched my other videos, I've talked about this. I'm not going to go down that rabbit hole. So let's get back on point with the 1.99%. This is extremely important as a buyer to understand that 1.99% may be the advertised mortgage rate, especially builders are putting this out right now. But your actual percentage rate might be as high as 5 or 6%. So if you're going into new construction, or you're going to a for sale by owner, or you've gone to an open house and you're talking to an agent and they say, we have a special rate, make sure you understand what the actual percentage rate is, because what you may find is that you're going to spend more money than what you think you're going to spend. The way that they're calculating the actual percentage rate is they're adding in the percentage rate that the loan is costing. So I'll compare this to leasing a car or buying a car. So when you lease a car and they say, hey, you can rent this brand new car for $300 a month, and then when you get to the dealer and the dealer says, oh, we have one of those on the lot and you can only put 5,000 miles a year on the car. Well, now you're spending this money every single month to basically, for most people, have a car sit in the driveway or in the garage. But then they say to you, oh, if you're going to drive this car 10 or 15,000 miles a year, you're going to pay a much higher rate. So don't get pulled into the temporary buy down, which is what most everyone is advertising right now, 1.99, 2.5, 3.0. It's a temporary buy down. It's not a fixed rate. Not to say that there aren't lenders out there, especially in new construction or even in resale. As a buyer, you can always buy down the rate, and you can always ask the seller for closing costs, which you can use as a buyer however you want to buy down the rate, to cover your actual cost, whatever it is. It depends on your particular loan. My point in discussing this 1.99 is that these signs have been popping up everywhere in Frisco, Prosper, Salina, Aubrey, Little Elm, the areas that I specifically have boots on the ground in. And I've been getting a lot of emails, text messages, phone calls. Troy, what does this mean? Why, when I talk to my lender, it's 6.5%, and this builder saying 1.99%? And that is because it is a temporary interest rate. So I've had too many buyers say to me, well, if I can get at 1.9%, I'm going to buy this new construction home at $450,000. And when we run the numbers, I can show them an equal home at $400,000 or $415,000 that we can ask the seller to do the buy down as well. And they actually wind up saving money. So we're kind of coming full circle in this conversation that the 1.99% or anything below prime rate today, no matter what day you're watching this video, is most likely going to be a temporary buy down. It's a good program. Like I said, I bought a home on this type of program, a resale home on this type of program last year, and it does save me money. And now I strategize on when do I want to try to lock the new rate in, whether it's now or later. So don't be deceived by the 1.99% and think that you're basically getting free money. And I think that's what we saw during the pandemic, where the banks lowered rates so low and people were buying homes as fast as they could because we were getting 2.5%, 3.5% interest rates. And those were fixed rates. That was to stimulate the economy and keep things moving along. Now we have inflation, and the feds are not dropping the rates, and the banks are definitely not dropping the rates because of such inflation. Here's something else I want to touch on in this video real quick, is that someone came to me and said, well, I'm going to wait for the rates to drop. And I think that's a great idea if you have time and if you're a gambler, if you're going to gamble on what you think rates are going to do. But as a buyer, I want you to think about this. If rates come down, because we've been used to 7%, 7.5%, even 8% for the past 12 months or so. If rates drastically come down, as a buyer, do you think you'll have more competition or less competition? Now just think about it. If you have more competition, that means prices are going to go up. Now, right now in the North Dallas, Texas area, we're not seeing crashing numbers that some people have predicted. I've seen videos on YouTube and other people on YouTube saying, oh, the market is 30% down. It's 30. I'm not seeing prices drop 30%. I've seen the market soften and become more stable. Right now, we currently have about 4 months worth of inventory. That's considered a semi-stable market. It's still a little advantage to the seller because we don't have more inventory. We still have a shortage of inventory in this particular area. I'll do another video on this. Maybe next week we'll do something about inventory and absorption rates and whatnot. I want to stay really specific on this 1.99%. So the bottom line, or to wrap this up so I don't keep you staring at my video here forever, is anything below prime rate today, most of the time, if not almost always, is going to be a temporary interest rate. So my advice is work with a lender that's going to explain this to you so that you know whether it's new construction or it's resale. Work with a real estate professional that understands what these temporary rates are and run the numbers. If you know me, you know that I always want to do what's best for you, your family, and your money, because that's how I think and that's what I do with my money. So I've been excited and looked at different programs, said, well, this is going to be awesome. And at the end of the day, when we ran the numbers with my lender, I'm like, well, it's really costing me more money than it would if I just went with a standard loan. So I want you to run these numbers and make sure that they totally make sense. If you're buying resale or new construction, please be aware of the taxes, the HOA, and any other type of closing cost fees, as some builders or some communities actually have enhancement fees. So when you buy the property, there's a certain amount of money that you have to pay that goes towards the community to keep their HOA or keep their books solid. So look at all the fees. Is the bottom line of what I'm trying to say. Is look at every single line item when you're buying a home. Make sure that you're doing your research. I know with technology and everything that's gone on in the past several years, I've had buyers and sellers both say, I got this, I got this, I got this. And there's a percentage of the time I get a call back later that says, hey, can you check this out for me? I'm not part of the party. I'm not a party at the party. I'm not a person at the party, basically. So legally, there's nothing I can do. Ethically, there's not much I can do. We're not contracted. So please be very careful when you're spending money like this to make sure that it makes sense on both pennies and dollars, on how you're purchasing a property. 1.99% is out there, 2% is out there, 3% is out there. The key is that most, if not all of these, are temporary buy downs. So be very aware of what you're doing. As I always advise, not just because I've been in the business for a long time and I'm a professional realtor, is I would highly recommend working with a professional realtor and working with a lender that you know, like, and trust. Make sure you get all the facts before you sign on the dotted line. The worst thing that ever happens is going into a closing table to get your keys, and you've wired your money, you're signing the paperwork, and as you're signing the paperwork, you realize that the house is costing you way more than what you had anticipated. So keep your thumb on the pulse of the market. Keep your thumb on everything to do with your financial side. Now, if you have any questions about this, leave a comment below. Feel free to reach out to me direct. I'll be happy to schedule time with you, discuss how these programs are working, and let's see if it benefits you to use a program like this. If it does benefit you, fantastic. If it's not, let's find the best way and the most comfortable way for you, your family, and your money to actually purchase a home. And if you're thinking about selling a home, please be aware of what's going on in the market around you. If you have new construction across the street or a couple blocks away that are offering these types of programs, you may want to consider this exact same type of program to offer it out to buyers, which is going to affect your bottom line. The last thing I'm going to say about sellers, or another thing I'm going to say about sellers, is that please make sure that you look at new construction, then come back and look at your home, or at least look at your competition on resale, and then look at your product, your property that you're going to sell, and compare it as a buyer of how it looks when you first walk in. Our market has changed. So you're going to have to make sure as a seller that it's freshly painted, that it's staged well, that it is appealing to somebody that walks in the door. Because seriously, the days of throwing your home on the market and getting whatever dollar amount which you want, those days are long gone. Interest rates have adjusted higher, and buyers are savvy, and buyers understand that they can wait. So listen, if you have questions about any of this, or there's a specific video or live that you'd like me to do, I'd love to answer all your questions. Leave a comment below or reach out to me direct. And do me a favor, if you like the information I'm providing here on YouTube and on Facebook, click the like button, because that helps me. That helps make sure that the algorithm is pushing my information out. And if you want to stay current on everything real estate related in the North Dallas, Texas area, or basically in the DFW area, click subscribe and the bell, and you'll be alerted every time I go live and every time I upload another video. I appreciate you, and I'll see you next week. Bye for now.